Hello, hello, welcome. It has been a while since we've talked yet again. I am currently battling the flu, a virus, possibly COVID. I'm not too sure. I had to take some Dayquil to even come up here and master the strength, not to sneeze. I just sneezed right before I just turned on the live. So if I have to blow my nose, kind of disgusting. Just bear with me here. So please let me know if you can hear me. We have started. I'm standing up right now. We have a standing desk. We are slowly building out the studio. It has taken me some time to get to this place to build something great for you guys. So if you guys can hear me, please let me know. Type it in the chat. All right, so we have a lot to talk about. First we were in a very bad bear market, and all of a sudden we just got a rebound, right? Something's going on, right? And we're going to be talking about it. We're going to be breaking down market analysis. And then we're going to do the technical analysis, looking at support and resistance lines. So for the day traders, swing traders out there, or for the long-term investors that want to know when to get in to accumulate shares at a low price, this is the video, right? And we're going to get back and ramping up on this, and we're going to get things going. So without further ado, I hope you guys are doing well. I miss you a lot. Yes, Discord family. Hey, how is everyone doing? Please let me know if you hear me, just in case. But as you can see here, what this looks at is it essentially takes from 1928 all the way up until 2022, right? It measures the longest losing streak since 1928. Okay, and you can see that the market that we're currently in right now, we had 7 consecutive weeks of losing, 7 weeks in the red. Now, for some of all, everyone in here at Clover, everyone's like, well, hey, Al, I've been losing since November. Well, that's true. I have another slide set I want to show you guys. I actually planned it out last week, but I got sick. But the PE ratios for small cap companies are actually at recession levels. So if you're wondering, like, man, I'm a terrible investor, man, what the hell is Al talking about? You have to understand, we are in a special market right now. Okay, so there are going to be a couple of videos that I'm going to be making and pumping out to give you the whole picture, so you understand what's happening in the market right now that the media is not talking about. Okay, you're never going to get your news from the media, right? So we're at levels that are near the 03. We've passed the 2008 levels, right? We're at extreme losing streak levels, and we're at levels that we see around 1928, 1968, 78, and the 2000 bust.com bubble. So this is definitely not your typical market. So just to give you some updates, so in the start of June, the Federal Reserve is going to begin quantitative tightening. Okay, let me go ahead and show myself here. So quantitative tightening is going to start in June, and it's going to last for 3 months at a $47.5 billion a month being taken out of the system. After 3 months, it's going to jump up to approximately around $95 billion. Okay, so for people that don't know what quantitative tightening is, monetary, quantitative easing, so sick. Easing is the ability of the Federal Reserve to pump in cash, the money go burr into the economy, right? So we're going to be pumping in money in the economy back in 2020 when the pandemic happened, right? Now they're taking money out, okay? And the thing is, they're going to continue doing this until the inflation goes down. So excuse me if I'm sounding weird and my sentences are jumbled. I have a 101 degree fever right now, but I'm trying to give you guys the necessary news to tackle this week's trading week. Okay, so we're going to continue to pull out money in June, so we may be experiencing some downside. But I think the market and the stock market has been prognostic to factoring that in before it even happened, aka stock market lingo is it's already been priced in. The PE, the core PE ratio, right, or the percentage, In March, it was 5.2%. And then now it is in April, 4.9%. We have been going down. So I do expect inflation to start ticking downwards in the next couple of months. This is extremely good news, okay? This is extremely good news for the end, because the big problem now is inflation. And we're gonna, what I'm gonna show you guys in this video, we're gonna see that there's a new problem, growth, okay? So we're gonna go back into here and we're gonna continue. So as you can see, whenever we have a 5 to 6 week losing streak, right? Excluding 1930s, we're here in the 60s all the way up to 2022. You can't see it. You can't see it here in my, because the out stock trades is in the way. I got to get that out of the way. That is so freaking annoying. Okay. I'm just going to have to explain it to you. So there's a dot right here and we got a signal. Now this signal only happens a certain amount of times. And as you can see, a year from the signal that we just experienced of a 7-week loss, in about a year from now, the S&P is going to rally up 27% at 100% of the time. So out of all the times we've gotten the signal, as you can see, one signal here, one signal here, there is an indefinite rally right after. We got it in 1970. We got it in 1980, in the 80s here, down here in the 90s, then now in the 2000s with the whole dot-com bubble, right? So now we just got it again, and it's right here. You can't see it. The out stock trade symbols in the way. It's freaking annoying, right? I'm gonna have to get that out of the way. All right, so this is good news because it's, in fact, if you break it down in the 2 months, 3 months, 6 months, we are going to see a relief rally, right? All right. Now, if you look at the fear and greed model, again, you can't see it here, but we got another signal. You got to trust my word into this one, okay? What the signal is saying here is that we have gotten to a level of extreme pessimism, right? The green line here is extreme pessimism. And the last time we got to this level was around 2020, around 2015, when I believe this was a taper tantrum happened during that time, in the 2008 great financial crisis, the dot-com bubbles and all the other issues that we've had during this time. So because of this extreme fear that we've been experiencing, there is a relief rally 1 to 2 to 3 months out. And the probability and the win rate of this specific rally goes anywhere between 86% to 100%. So it's extremely significant, okay? So this is extremely good for stocks because you're starting to see that maybe we may have priced in a little too far fearish and bearish than we may have needed to, okay? Now, if you look at the smart money and dumb money confidence spread, now normally I show it to you, smart money and dumb money. Now this, the way we read this is that the higher the number is, the higher smart money is confident in buying stocks, okay? And as you can see, what I'm going to be doing here is I'm going to try to, yeah, I can't get out the branding here. I'll take off the all stock trades later. But as you can see here, we got another signal. We can see the signal here. It's also up there too, right? And every time we get this signal, 1 month to 6 months, we get a big rally, 4.86%, 6%, 7%, 8%, 12.13% in the S&P 500. Okay, what this tells you is that smart money is buying right now while dumb money is selling, okay? We don't get these parcellations of where smart money is so confident and dumb money's not. And obviously, who do you want to follow? Do you want to follow dumb money that constantly loses? Dumb retail investors, sadly, I hate to cripple them to that degree. But if you go, we've heard Chamath Palihapitiya say this, if you get access to this material, which is the material I'm presenting to you, you make money in the market, okay? So if you don't want to take anything and just do opposite of retail, right? Sometimes they got it right. In 2020, they got it right, right? But Wall Street's back in business, and you need to start economics and that fundamental investing is at its highest peak now. So if you don't know those things, it's important to learn it because you will lose money in the long run. So as you can see, they're very confident in smart money's buying. Okay, so so should you. So if you look at the fears right now, in the beginning, we had fears of inflation. But now when we look at the core PCE and the CPI, we're starting to see things start going down. We know in about a year from now, 2 years from now, we know that used car sales are going to start decreasing. We know that this is going to happen and it's going to be baked in the price. We know that Russia is going to eventually have to stop their war because no one's buying their oil anymore, only a few certain countries. We know that oil prices are going to start sustaining itself. We know that the American oil companies are going to start drilling and capitalizing on these types and flooding the markets with crude oil. Inflation will take care of itself, especially in the June meeting with the 50 basis point hikes. All of these components are essentially going to drive down inflation. But now we have another problem: growth worries, aka Netflix. Right? A good example, right? But guess what? What did I tell you a while back? I don't have the slide. I should put it. Healthcare and technology. Healthcare and technology, guys. Those are the stocks that you want to look at now. Back in November, I was stressing energy. I said energy, ExxonMobil, another oil pipeline company I was talking about on the Discord in February. Well, we're up 100% in that. We're good now, right? Now we got to look at what's the next level. Before Wall Street gets to that level, we got to be one step ahead. We got to be one step ahead of Wall Street. And right now we're at growth worries. So we got to find stocks that have a moat, that have a stickiness substance around them to where they will constantly grow. Companies that did not do well during the pandemic, right? And because the ones that did and that used the pandemic to their advantage are going to have a hard time for the future, okay? And you got to look at selectively picking up Cathie Wood stocks, which we have access to, and you can find them online, okay? So now this is another graph. This is called the Nasdaq high-low ratio, right? I'm joking, right? And this basically measures the percentage of stocks that are essentially at their, extremes. And we're at a level now where there's a lot of stocks in their 52-week low. I don't have to tell you. You just have to look at your portfolio, right? And as you can see here, we got a signal. And every time we get these signals, we get a huge mother effing rally, okay? Now look at 1 year out. 6 months out. We get a 26%, 27%, Jesus, round up, right? 27% average return with a win rate of 92%. And a year, look at a year, 40% return 92% of the time a year out once we hit these types of levels based off of the probabilities of the market that we've experienced since literally in the 80s, okay? So what does that tell you? Since 1985, you can see right there. So, and what does that tell you guys? Think about this, okay? Take a moment, think, let's take some time and think, okay? It is the perfect time to get into these tech stocks, okay? You're not gonna see these levels in the future once inflation takes care of itself. Yes, there will be other fears. Yes, it'll be the housing market, in my opinion, right? As those are extremely overvalued, right? And other things. But this graph, I should just end the video now, right? There's more I have to talk to you guys about. But this by itself should give you an understanding of the type of stocks in the market that we're in right now. The people that buy low right now in dollar cost average are the ones that are going to be winning. And it's very clear a year out and Nasdaq going up 40%. Think to yourself, ladies and gentlemen, if the Nasdaq goes up 40%, how much is PayPal going to go up? How much is Clover going to go up? How much are these, Facebook Meta going to go up? Think, okay? Very, very important. Okay, so now if you look here, this is called the intermediate term optimism index. Now, the easiest way to name this is the risk on, risk off indicator, okay? Right now, we are at levels of extreme risk offness. And the times that we get to these levels, we're at a level that we've hit the first time since 3 months, 4.9 degrees, okay? Now, if you look at this, every time we hit this, we get a short-term relief rally. So what I'm doing is here, I'm looking at short-term, long-term statistics, and from what looks like, the probability of success in green is higher than that of being red. Now, a lot of people are going to try to drive down recession fears. A lot of people are going to try to basically scare you. I just posted on my Discord that the probability of a recession is decreasing, but the probability of a mild recession is increasing. And Kathy Wood talked about this 7-8 months ago. We've talked about it. We're going to be skipping a mild recession and we're going to get back on track, right? Now, I don't know when that recession is going to happen. I wish it happens earlier, but the Federal Reserve and the Biden administration is working hard to prolong that. I think they're going to prolong it, I think, and then drop the ball on the next party, from what I'm looking at, right? Now, if you look at the corporate insider buy and sell ratio, analyze this, okay? This is the buy and sell. We are getting levels and signals that we haven't received since the 2020 pandemic. I'm going to say this now. The people that are watching this video, I want you to remind yourself, you remember how you felt in 2021 after March? You remember? We were like, man, I wish I took advantage of that drop. Man, I wish I took advantage. This is the time. Corporate insiders are buying, okay? That is a very bullish signal. Now, let me tell you something. When someone sells stocks, you don't know. They could be undergoing a divorce. They could be wanting to renovate their home or pay for their kids' college. Who knows? We don't know why people sell. But let me tell you something. When someone buys a stock, you know exactly why. Okay, and it's very clear. A year out from now, the average return is 30% okay, with a win rate of 100% of the freaking time. Meaning 2023 is going to be very bullish. Guess what happens in 2023? Clover Health becomes free cash flow positive. Guess what happens in 2023? Clover Health becomes profitable. Think, drown out the noise, ignore the noise. Focus on the stats, focus on the intrinsic value, focus on the fundamentals of the business, okay? Wall Street wants to take your money. Think for yourself and use this data to propel you so you can make money for your family, okay? All right, now if you look at the corporate insider velocity on XLF, now if people don't know what XLF is, you can think of it as an ETF for the financial sector. We're at levels, the last time we're at levels like this was 2020, okay? Again, there's a pattern to this. There's a pattern to this. This is the financial sector. This is very bullish for the financial sector, which is why Warren Buffett bought in really good at those prices, right? He bought in Bank of America in November of 2021. And people are like, what is this guy doing? Why is he buying, or 2020, and why is this guy buying Bank of America? Think about why he buys things. He knows financials and oil. That's his game. That's the name of his game, okay? We're at levels now where corporate insiders are buying up financial stocks. Why and why am I showing you this? Well, because what do financial stocks do? They buy other portfolios, they buy other companies, they buy other tech companies. They are stock pickers. And the higher this goes, the more bullish the stock market will become. Now, I teach this, and I will be teaching this in the Mastering Stock Market course and in the bundle, Chapter 2 of The Intelligent Investor by Benjamin Graham, the father of value investing who taught Warren Buffett, states that, what do you buy during inflationary times? Stocks or bonds? And it's very quite simple, ladies and gentlemen. Stocks outperform bonds because of pricing power, okay? Pricing power. Now let's go shift quickly in homes, because again, that's all part of the stock market. Yes, homes, yeah, isn't that crazy, right? So if you look at here, for the first time since 2010, which is this arrow right there, the signal here, new home sales have fallen for 4 consecutive months. Again, new home sales have fallen for 4 consecutive months. These are 13 signals over the past 58 years. Be careful when it comes to home building stocks, especially in the next 2 to 3 months. You should be careful with those home building stocks. I'm telling you, okay? The statistics is very weary, okay? And we already know, you guys check in Zillow, you can see there's a lot of price cuts. There's a lot of supply starting to enter the housing market, okay? Now, there's a lot of other YouTubers out there a couple months ago recommending buying silver. Again, you got to do your due diligence. You got to do your research. They're incorrect. You don't buy silver during that time. Historically, the dollar tends to go down during May, June, and July. And what ends up going up, as you can see this graph here, during the 100th to 200th day, yes, we have those statistics, and the US dollar seasonality tends to go down during that time. So what's a good investment if you want to hedge your dollar? Gold and silver. So look up those minor stocks during the summer, because they could be a good investment, okay? Now, let's look at support and resistance levels on the minute chart for Clover, okay? As you can see, currently we are trading, let me just give me a moment here. Let me take a look at the actual stock. We're at 271, okay? Which is right around here. Now, what we're going to be seeing here, guys, is I want you to take a look at the support levels here. We could drop down to 253, 220, or 203, but if you can look at it right now, we got a strong support here at $2. We've hit $2 for quite a while. In fact, let me go ahead and shrink myself here so we can see the $2 here, okay? If you go down to the hour chart, you can see that multiple times we've hit that $2.10. Now, there's a huge level of support here. Now, what you can do is you can get some, you can sell some puts down this level if you want to buy in this region. But if you were to see right now, this is a great time to buy, guys, because it seems to me that we are slowly going up the ladder here. And the next level of resistance is at $3.08, okay? We're going to go in the comment sections right after I finish these slides here, okay? And so that's very important. We got a big resistance that's been rejected multiple times at the $3.60 to $3.80 level. So watch that. If you look at Clover, God, it's been definitely on a downtrend. You have been tortured and tortured by a stock that's only been giving you positive news just to show you the calamity of how Wall Street likes to manipulate stocks, okay? I don't listen to those buffoon Wall Street analysts. I am my own analyst. In fact, I'll be taking my CFA, Chartered Financial Analyst exam on the side, not because I need it, just because to have the credentials to enter the medical entrepreneurship arena in the healthcare, because I am an aspiring physician. But as you can see here, we're at a strong 278 level of resistance here, and we're, I believe, going to break this very soon. And we're going to start battling from the $3 to the $4 region. So stay tuned for that. And once we do that, then we can draw a beautiful line of support here, and we're going to finally be going up to the $5 to $7 levels, okay? And again, keep these resistance in mind: 419, 747, 1204, and 1503. We will be seeing these very soon. Now, if you enjoyed this content, if you want to learn more about the stock market, we have our Al Stock Alerts, which is our private Discord channel, which gives you, it's a monthly subscription. You can get it as low as $10 a month, is our buy and sell alerts, price targets, and private Discord. We have our Mastering Stock Market course, which breaks down fundamental analysis, technical analysis, options analysis, both basic, beginner, advanced, and gives you an intrinsic value calculation, book value calculation, when to sell calculation, and a stability calculator calculation. I haven't updated it on the stock. It is 50% off. Please use the expiring coupon code down below if you're interested. And it does come with lifetime access to the Discord channel just for this brief time that we're building it. Okay. And we have been featured on Bloomberg, MarketWatch, Nasdaq, Benzinga, Yahoo Finance, and many other amazing big financial platforms because our product works. All right. We bring back value investing and what people honestly have forgotten. So let's go to the comment sections here and let's get to work. So, yes, Discord fam, we are a family. We are a family. Absolutely. How likely is a deflationary period in a recession is following this? So I believe once inflation ticks down, we may be entering a period of deflation. So that is coming soon, and then we'll be ramping up. However, our economic indicators suggest that we are in a very strong position. And if the labor market continues, now we did have some tech jobs firing, right? But if this market trend continues, we may be avoiding a recession. I want one to happen so we can reset. We do need a reset. I mean, come on, right? You feel it. Things are expensive. You know, we do need a reset. But they're pushing it along, so we may just skip a recession. But in 2-3 years, we're going to get one for sure. Proud to say my most average on Clover is now lower than the C for Clinton. Yes, my friend Chelsea Clinton. Shout out to you. You bought at a really good price level. Thank you for the board, and hope I hope we can hear more from her. I'd love to see her point of view on why she likes Clover. But yeah, that should give the Clintons don't lose, right? But regardless of your politics, they're definitely a hard group of working people, and they've dedicated a lot, regardless of your political stance. They put in a lot into this country. Okay, so now if you look up Zeke for Bleak, what's up? How are you doing? Long term, baby, absolutely. I remember you commenting that when we were showing the high low. Absolutely, yeah, 34%. Year from now, 30% return on the Nasdaq. Absolutely. Definitely. Oh yeah. Yeah, you guys are all nerds. To see this information, no one talks about this. But it is what it is. I'm glad that you guys are starting to see the bigger picture of the market, because this is what Wall Street uses. They just don't want to admit it, right? When do you see the markets reversing? Based off of the calculations in the next anytime, very soon, I think the market is going to reverse. Now, again, we are seeing some Federal Reserve manipulation in the market, and we want a recession to happen, but it's just not happening. Maybe a mild recession, but definitely I would tell you 2023 and 2024 is going to be great. Because of this recession skip, 2025, 2026 may be questionable. We'll see. But again, if we can achieve our price targets earlier, we'll be able to get those tendies faster, and then we'll be reassessing the market. And then you guys may not, just FYI, I am a fundamental investor. We may exit the market and we may just watch. Again, being patient, that's when you make your most money. Remember that, okay? But I'll let you guys know every step of the way once a stock gets to its intrinsic value. Can you show the same chart, but for 2008? I think that would be interesting to look at. Yeah. So if you want, we can analyze everything in 2008, but we do have the charts from there. You can see the 2008 levels, and you can see a lot of the signals that we've received, such as the corporate buying and all that's happened during the times of a recession level. Sadly, when a lot of people of their 401k and a lot of stock, retail has been selling. Again, Wall Street wasn't made to make you money. Wall Street was made to take your money. Remember that, okay? Wall Street doesn't care about you. They don't give a damn, okay? So I always like when you show stock price projections. Yeah. So we'll definitely look at the intrinsic value calculation. In fact, I updated it. It looks so beautiful now. Our intrinsic value calculation looks extremely professional. In fact, let me see if I can pull it up here. To show you in our mastering here. Let me log in really quickly here and show you. So if you look at here, this is our intrinsic value calculation. As you can see, it looks really professional. Here's our book value. Here's our intrinsic sell calculator. And here's our stability calculator, where you can graph all this, the information of a stock, and it'll basically help you determine. And then we have definitions for each of them down below here. This is all part of our Mastering Stock Market course. So yeah, there's going to be some great price projections that we're going to be having. A lot of great stocks are coming. Got to break that $2.89 then $3 push to that $4 and $5 level. Absolutely, absolutely. I completely agree. That $2.80-ish level has been a tough one to crack. Definitely. Absolutely, yes. And then how do you have time for all this? Man, I'm sick and I'm doing this. Again, I have a mission and it's very simple. You only get 29,000 days in your life, right? 29, 30,000, right? Take 365 days multiplied by the average life expectancy in the United States. It's around 30,000 days. Now, what are you going to do? Dedicate your life. Again, you can't take money with you, right? So you can accumulate all this money and you're not really going to take it away. So what's the best else thing that you can do? You can build a legacy, right? So I'm building a legacy in medicine. I'm inspiring not only my colleagues, but my mentors that, someone from the bottom can become a physician and help the poor. And not just that, we're taking it also now outside of the medicine, inspiring people of the world to know about value investing, to learn about Warren Buffett. All of these, in business school, they're not going to teach you about, like there's a nice lady that Warren Buffett adores. She sells carpet I think she's passed, unfortunately, but she's on her little motor cart and she sells carpet. You go to Harvard Business School and none of them are going to analyze her, right? And she's the best businesswoman, right? So what I want to do in my mission outside of the clinics is to teach all of y'all exactly what Wall Street does, exactly market analysis, fundamental analysis, because the problem is no one reads books past 1950. I don't know why. I learned to do this. I went to at a young age, but I went to Mayo Clinic in Rochester, top 1 hospital in the world. And I was getting health there too. And I was looking at Brodmann's area for brain-computer interface. And I went all the way back to 1890 and read books from there, all the way to 1870, and took that knowledge out and grew it over time. The problem is no one has time for that. That's exactly what I'm doing for the stock market, okay? And all of our students are reading books from days long time ago to get that first principles thinking. Okay. Signed up a few weeks ago and loving it. Hey man, it's a privilege and honor. Again, the prices that we have, again, this is lifetime access. And all the people that are on this are planning on using this for the next 10 to 20 years. And I plan to keep this alive for the next 30, 40 years. In fact, I'll have if I die, have a lawyer system to extend this out to infinity. That's my goal. Again, I want to make these calculations to where you will be using this for the rest of your life, okay? Because you can't go in this market blind. So yeah, that's my job, is to keep this active. And this is essentially my second part of my life, right? And we're building it out. We boom. Oh yeah, 2026, 27. Oh, dude, it's going to be a beautiful year. I'm going to see all your guys' houses, pictures of your houses, and hopefully you don't buy a nice car. Those are terrible value unless you buy an undervalued supercar and you get into that business. But I wouldn't waste your money on a car, right? But don't, but it's your money. But screw the green Lambo. Get a fourplex, right? And if you don't have a lot of money, you can get a fourplex with an FHA and then go ahead and rent that out. You can use that income to help you with that. There's a lot of tricks, and we'll be doing other things in the future to help you learn about real estate. I personally don't like to teach something I don't have 10 years of experience on. So give me about 5 more years and then I'll be able to teach that. But right now we're doing with what I know, which is stocks. Okay, so EU is going to ban second and third Russian oil. Don't think that is going to do very good for the gas prices. But it will eventually cause Russia to stop their war, right? And I'm actually scared of what Palantir's comment was. If you guys didn't look at Palantir, the CEO said that there's a 20 to 30% risk of a the day quilt is running out. I'm starting to get sick again. Sorry, I have a flu for people that just joined. So got a little fever there starting to creep up on me. So the thing is with Russia is that they're going to lose their oil supply, their buyers, and that's going to eventually trickle on to if they want to continue the war. My fear is that they may just give Ukraine an ultimatum and say, listen, if you don't quit this war, we're going to nuke you. And they might drop a nuclear bomb on Ukraine. And then they're going to say, oh, well, United States did this back in Hiroshima and Nagasaki. And I just don't know, guys. It's a very scary. So very scary. Looks good. Good. I own a boatload of BTG. Exactly. Yeah, we have a Barrick Gold. We put a price target on that in our Discord. Get some DWAC Truth Social. I've used the platform to see how it is. And I'm looking at I was looking at it to see how it is, and it's just a lot of Trump. It's a lot. If you don't know Trump on that platform, you're blind. I mean, it's really a lot of Trump, and I get it, because he was banned. I want to see it more developed, right? Own Clove, want more. Oh yeah, me too. Hell yeah, BTG. Has been the worst performing gold stock. Yeah, and I think it's going to definitely change. I'm not too sure about the financials of BTG. I got to look at. I like Barack Gold. Hope you feel better. Yeah, man. It's definitely been tough. But I have amazing people in support in Tucson. They got me amazing, really great people. They got me soup and everything to take care of myself. I've never had anyone do that for me, so that's just very nice people. Yeah, guys. So I think this is it here. So just to give you BlackRock owned big time safe. Yeah. So I'm gonna analyze the SEC 13F filings and be doing another video. But I just wanted to give you kind of a market analysis, a market update. The YouTube studio is finally coming together. As you can see, I'm standing. I like presenting when I'm standing. Allows my posture to be a little bit better. And but yeah. So if you guys are interested in this platform here, there will be a link down below. You can find us also at alstocktrades.com, which is down as you can see on the screen here. And I hope that we can become partners and we could build a community, lifelong community. And I hope the people that we educate in the mastering course stay on our platform and continue to provide their insights. We got people analyzing they're crazy, man. Crazy just like me, analyzing all of an ETF, finding each stock, finding its intrinsic value and seeing if it's worth. And as we continue pumping out mastering stock market material on how to Warren Buffett analyze a company, we're going to get an army of analysts in our platform, and it's going to be amazing. So as always, guys, God bless you. If you like this content, please consider liking, as it helps with the YouTube algorithm and gets the news out there, and subscribing and hitting that notification bell so you guys can keep up to date. My apologies for not posting a lot. I've been so my nose here. I'm sorry, nasty here. I've been really sick, and but once I get through this, and I'll be better. And be able to supply you guys information. So God bless you guys, and I'll see you on the next one. Please be safe, be healthy. If you're in a crowded area, wear your masks, because at least in Arizona, we're starting to see an uptick in positivity. So be careful with that. And God bless you guys. And don't get sick like me. All righty. Thank you, guys. God bless you guys. Thank you. Yeah. Thank you.